Hey Nate, how you doing today?
I'm good. How are you?
I'm good. I'll be facilitating this one today.
Oh, cool. You can hear me okay? I've had issues with Zoom sometimes.
Yeah, I can hear you.
Okay,
We have
perfect.
like 33 or 34 people signed up for today, so we might get about half that in attendance, which would be nice.
Yeah, that's great. Uh, Good week so far?
Not too bad, yeah. Uh, Ended up having dinner with Ethan on Monday. That was nice.
Oh, that's nice. Yeah, I'm hoping to catch up with him soon. It feels like I haven't talked to him in forever.
He's moving soon.
Oh, really?
That'll be interesting.
Locally or like a big move?
Locally, like right across the street from where he's at now, just getting his own place kind of thing.
Oh, that's exciting. That's great. I'm glad he's not moving away.
Yeah, oh yeah, 100%. I mean, like it'd be nice if he moved to Bath, but
Yes, I'm sure. Yeah, you and him seem to hit it off really well.
yeah, hopefully we'll be able to start working out together pretty soon. That'd be fun.
Nice.
Yeah, just want to say hello and thank you to the folks who joined us a little early today. We're gonna wait a few minutes to get started here for a few more folks to probably get off their lunch, get onto their lunch period and join the chat. But if you'd like to talk a little bit about and maybe send a message about what your business is about and what you're hoping to learn here today, we can have a little bit of a discussion before we get started.
Well, my business is a doggy daycare that I run with my son, and we're 2.5 years old, and have experienced a lot of progress and a lot of success. And I, at a point where we want to do some expansion and haven't really gone to a bank for a big thing. And so I'm just wanting to learn anything you have to share.
This is definitely a great start. Did you say doggy daycare?
Yes, called Puptown Funk.
Those are getting, I feel like those are getting huge nowadays.
Yeah.
Folks are definitely a lot more cognizant of their dog's needs. And it feels like, especially I can imagine folks, are you doing like overnight boarding as well or?
Yes, and our main thing is we're kennel free. So there's no kennels to be found
Mhm.
anywhere. So the dogs are outside running and playing. And that seems to be, people like it a lot.
I imagine, plus the ability, folks can travel, leave their pet behind, know that they're safe.
Yep.
Well, thank you
Welcome,
for
Deb.
joining us
I've
today.
actually worked with a few doggy daycares in the past, so
Oh, cool.
yeah, they're great businesses.
He's
Definitely.
doing great. I'm a retired teacher, just organizing the front. He's doing everything else. So.
Oh, nice.
It looks like we have a couple more folks who have joined us. Just want to say welcome to those folks. And right now, we're just going to wait a minute for some folks to funnel in. But if you would like to, feel free to unmute yourself or type into the chat what your business is and what you're hoping to learn about today. We can have a little bit of a discussion before we get started. Ooh, very interesting. We have someone in the chat mentioning they want to open a barcade. I know Acadia downtown is in Portland is absolutely huge, and it's a very interesting business model. I definitely think those are cool. And with that, we'll go ahead and as people still seem to be filtering in, but we'll go ahead and get started. I want to thank everyone for joining us today. My name is Dan Reed. I'm with SCORE Maine. If you're unfamiliar with SCORE, we are a mentoring service affiliated with the Small Business Administration, where we provide absolutely free one-on-one business mentoring with anyone who in the United States who's opening or is in business. And we provide that from the start of business or pre-start all the way up until valuation and sale. So at any stage of your business life cycle, we have someone who can help you out. And it is National Mentoring Month this month. So I do want to say a huge thank you to our 110 volunteers that we do have here in the state of Maine who volunteer their time to mentor small businesses. As I mentioned before, my name is Dan, and I am the marketing and program manager where we put on workshops just like this one. And I want to welcome Nate Henry of Kennebec Savings Bank, who's been an amazing presenter with us so far to present on the topic of business loan, business application tips. I'm sorry, it's a little bit of a mouthful, tongue twister. And with that, I want to pass it over to Nate so he can get us started.
Great. Welcome, everybody. Thank you for joining this afternoon. It's everyone's most exciting and favorite topic to talk about, banking and borrowing money. So I hope that you all can stay awake. So yeah, I'll get into the presentation and do a formal introduction, but I've done a few of these with SCORE and think they're an incredible resource here in the state of Maine. The Maine chapter has gotten recognized nationwide for the service that they provide. So we are really fortunate, and there will be a through line in my presentation. We are really fortunate in the state of Maine to have so many great resources available, whether that be on the banking front or in other services and advising. I'll have Dan manage the chat. So if there's any questions, it's a small enough group that we can kind of talk high level about people's businesses or answer any specific questions that people have throughout the presentation. So don't feel that it needs to wait till the end. And with that, Dan, do you mind pulling up the presentation?
Yes, give me one moment.
Okay, perfect. One thing I would be curious to start, because it may impact a little bit of how I present the topics. If people could say in the chat whether they're in a startup phase, whether that means a relatively new business or looking to start a business, or if they're an established business, that can help frame the conversation a little bit about the different things that are needed to applying for a business loan.
Looks like we have a few answers to your question, Nate. There are some, looks like a lot of folks are here with an established business and they're looking to kind of hit that expansion phase. And we have someone else who mentioned that they're in the startup phase and they're refining their business plan.
Okay, that sounds great. Some things that are pretty fortunate in this presentation, a lot of the tips that apply for startup businesses also apply for businesses that are looking to grow their operation and adjust what they're doing or bringing it to a larger scale. So happy to get started here.
Does everyone see my slide deck?
Yes.
Perfect.
Yep, so we can move on to the next slide here, just kind of an agenda for the topic. So again, as Dan said, my name is Nate Henry. I work in business banking and commercial lending at Kennebec Savings Bank. I help manage some of our larger loan relationships and work with a lot of small businesses on borrowing for the first time. I'm originally from the Bangor area, where my family owns a business. They own a bridal shop up in the Bangor area that they purchased from a family friend in the 90s and still own and manage to this day. So I was really fortunate to grow up around entrepreneurs and see what it took to run a small business, and really then moved down to Southern Maine, where I went to USM, dedicated to get an education where I could then work with entrepreneurs and help people more, fulfill that dream. So throughout my time at USM, I did an internship with the Maine Small Business Development Center, or Maine SBDC. The SBDC is another resource partner, also filtered through the SBA, and they offer business advising for free, again, through any phase of your business. So they partner pretty regularly with SCORE, and I think it's fair to say refer back and forth with one another. So both are really great free resources for anyone who has a business or who is looking to start a business. I will notate that for a lot of businesses in a startup phase that need technical support through drafting business projections and a business plan, I tend to recommend the SBDC for that, as they have quite a few templates that can help you through that process. And then when you have really industry specific questions, SCORE is wonderful at partnering you up with a mentor who can answer some of those industry related questions and think through strategy. So they're not exclusive from one another, and a lot of the times go hand in hand in terms of resources. So fortunate that I was able to do some work with them at my time at USM, and now work with them on a regular basis as a lender. I serve on the board for the Portland Regional Chamber of Commerce here in Southern Maine, as well as the Portland Development Corporation. So both of those are other resources to you as a prospective business owner or an existing business owner. And if you're not Portland based, most towns and cities will have a Chamber of Commerce that you can use to network and build relationships for your business. And the Portland Development Corporation is a great resource for banks as well as business owners. So they provide financing when a bank may not be able to. And in many situations, they'll come into a project where the bank is doing a loan, they'll do a small loan, and then you as the owner will be bringing some funds to the table as well. So just another great tool that's available. It's not uncommon for other economic development corporations to have either grants or financing at any given time. So a lot of that funding is not always consistent. So it's important to check their websites and know your local economic development office. So that's a little bit about me. So you can see the bridal gowns here. I may use examples from the bridal shop, as that's my background, or my family's background, I should say. So yeah, one of the most important things that when it comes to applying for business lending, one of the most important things is understanding your business or prospective business. It's one of the first things that your banker is going to be asking you about. And all of the things on the slide are important in terms of understanding what you can apply for and how a deal may be structured. So in the banking world, any business that is less than 2 years in operation is considered a startup. So whether you haven't signed a lease, your ideas on a business plan or on a piece of paper, or you've been in business for a year and a half, it's typically going to be considered a startup because you're still in a pretty high growth phase during your first 2 years of operation. You know, the day you open your doors is going to look very different from the end of your first 2 years. So understanding that if you're within the first 2 years, it is going to have an impact of what may be asked of you when applying for a business loan. I think I saw a question in the chat about that come through. Happy to kind of address that first and then move through the other.
Yeah, we have someone who asked, is the start date when you open your doors or when you became an LLC?
Yeah, that's a great question. A lot of the times it can kind of be both. But the most important thing is the day you really started running your business, because that's really when you started interacting with customers and earning revenue. So and I've seen it both ways, where someone may be operating a business under their personal social for the first 6 months, a year, sometimes first 5 years of their business, and then decide, okay, it makes sense for me to become an LLC or move from an LLC to an S corp. That we're going to really look at, when did you start interacting with customers? Then I've seen it where someone started out by forming an LLC, but didn't have a place where they were going to be running their business. And that was the first step they did before really opening the doors and beginning operation. So in that case, we would probably look at, okay, well, when did you really start having customers? And that's when we can understand the trajectory of the financials of your business. That's a great question. In terms of understanding your business, you want to be telling your story to your banker. So that starts out by, understanding where you've been as a person, individually as a prospective business owner, or if you've owned your business, what is the past of your business look like? Are you relocating to a new market? Are you looking to do a new location? Understanding your past is really important to then be able to understand where you are currently and what the future of your business may look like. I think an important thing to note about business lending as a whole is that it is not black and white. It's definitely lives within this gray area. And what I will say is personal lending is quite the opposite. So if any of you have applied for a car loan or a mortgage or a credit card, it tends to be you're either going to qualify or not qualify, or qualify for this much. And it's going to be based off of set factors such as your credit score, what debt do you have currently, and what your income is. Those really dictate how much you can borrow and what you can borrow. The terms tend not to be different. If Dan and I applied for the same loan and all of if our credit score was the same, our debt to the income was the same, we would qualify for the same loan on the personal side. Now, on the business side, what we really need to understand is who you are as a prospective business owner or as a business owner, and what your business is. That's why a business plan is so important. Whether you've been in existence or not, a business plan is really telling the story of your business and who you are as a business owner. Because Dan may have very different experience and very different skills that would allow him to run a business that could be successful, and that same business, if I was in charge, may not be successful, and vice versa. A business based in Bangor can do business a certain way, and if that business looked to relocate to Portland, it would have to adjust its model quite heavily. I can speak to that a little bit on the bridal side. The Bangor market is not as trendy, I will say, as the Portland market. So we're able to carry our inventory a little bit longer and don't have to be as aware of what's happening in terms of the fashion world in Boston and New York. Now, if you were to have a boutique bridal shop in Portland or Portsmouth, you may have to be a little bit more aware of the trends. That being said, you could also probably charge a premium for being aware of those trends. So the market in Southern Maine may be able to support a higher sale price, but you're going to have less inventory and have to be investing in understanding what the latest trends are. Where in Bangor, I would say that is important to a degree, but there's a little bit more flexibility there, and people are really looking for, do you have it in store? Do I have to wait to order it? The expectations are a little bit different from our customers there. So, understanding where your business is going to be, who your customer is, all of that is part of understanding your business. And your job is to tell that story to your banker, to your advisor, to anyone who will listen. And the better you get at telling your story, the more it's going to become second nature. So for those who are running your business currently, I'm sure you can speak to this. It's not always the easiest to work on your business. Once you have a house full, or not a kennel, but a space filled with animals and dogs, your priority is managing those animals and those dogs and those customers, getting to know the people that own the dogs, the pet owners. It is not necessarily, what is my am I charging enough that I'm going to be able to support this in 2 years? It's not easy. It's not as easy to have those thoughts and conversations when you're running your business. So carving out time to develop a business plan that can work as your guide as you're growing your business or running your business is really important. I think doing your homework now will make running your business a lot easier in the future. It's also something that's going to be important for your banker and to look at. So it's something that your advisor will help you through. I think I covered a lot on this slide. Does anybody have any kind of thoughts or questions? I
If you
can
have any
speak to the,
questions, just feel free to unmute yourself or feel free to post it in the chat and I can read it out loud.
and is there anything on this slide people would like me to cover further or use an example too? Okay, I guess one thing I can speak to a little bit on that back slide, sorry, Dan, is understanding the value of your business. So and in terms of understanding the value of your business in relation to the bank and how a bank is going to look at things. The value of the business is really going to be built on what assets the business has. So there is goodwill in your business if it's been around. If you're looking to purchase a business, there is such thing as goodwill, which can include customer information and other things. Now, how the bank is going to value that is likely going to be different than you as a business owner may look at that. The reason behind that discrepancy is the value of an asset to the bank is what that asset is worth when the business is not producing appropriately. So customer information is only so valuable, but if the business is not doing well, then likely that customer information is not going to be as strong as it was when you applied for the loan. So it is something that we can sometimes finance part of, but we usually look to the SBA or the Finance Authority of Maine for something that they have called a loan guarantee. So even if you have a business idea that doesn't carry a lot of assets, restaurants are a great example of that. It's really expensive to buy hood systems, liquor licenses, barware. Now, for me as a banker, I would have a very difficult time selling those near the price that it cost. Now, that being said, you still see plenty of businesses with expensive equipment that lease out space. They typically can finance those through loans that have a loan guarantee. So we have programs in the state as well as federal programs that will allow a bank to have a loan insurance policy if you qualify for it. And that supports the bank in doing the loan. So if your projections look well, your business plan looks good, everything looks good, but there is a lack of what we call collateral or that business asset, sometimes we can look to use one of those programs to help support the loan. So I can talk a little bit more about that in the next slide, but understanding that there are options available to you, but that you can articulate that, okay, I know that I have some high cost, but low valued assets. So I know it's going to be a little bit different of a process in terms of obtaining a loan. So applying for financing. One thing that is very clear, but sometimes gets missed, is what the loan funds are going to be used for. So we do have what we call a loan that would be in the form of a line of credit. Lines of credit get talked about a lot, but sometimes it's missed of what they're really designed for, or what they're designed for is missed. So lines of credit are meant to be what we call temporary working capital. So that's a fancy banking word. Essentially what that means is that it is a loan that's meant to be paid back in a short period of time, within a year, through the natural cash flow of your business. So a really easy example that I like to reference for lines of credit come with contractors. So if you are a contractor or in the trades, you are likely going to be taking on projects where you're fronting a lot of upfront cost. That cost is in the terms of equipment that you have to own. You're also going to have to buy materials and pay labor to do the project. Now, you are likely not getting paid for the project, sometimes at all, but definitely not in full until the work has been completed. So you may be carrying the cost of that project for 30 days, 60 days, 90 days, and sometimes less than that. So that carrying cost can be a lot when you have 3, 4, 5 projects going on at any given time. And unfortunately, the way of the world is usually the better the contract, the longer they're going to have to pay you. So if you're a contractor and you're doing work for Susie and she has a porch that needs repaired, well, Susie will probably give you a good deposit and will pay you each time you're there, and you're not carrying a ton of costs. You may go to the store, buy the materials, and then within a week, you're paid. Now, let's say you have a job with a large, I'm not going to reference any names, but a large contractor that does projects nationwide. They're going to be paying you probably on 90-day terms, sometimes 180-day terms. Government contracts are a great example of that. If you sign a contract with the state of Maine, you likely will be getting paid. You know that you're going to be paid. The risk of that project is very, very low. In terms of how quickly you're going to be paid, you're likely going to be waiting a while. So that waiting period, when you're incurring costs, you can borrow something called a line of credit to help cover those costs. So what we would want to understand is the needs of your business and the operations of your business, and supply you with a line of credit that could support you through that time. It's also used in businesses in the state of Maine for seasonality. So a lot of restaurants and hospitality businesses hire staff in the spring and carry staff all winter when they're really relying on the summer months to be able to make what they need to for the year. So they're ramping up staff, they're ramping up their ordering in the spring, even though that revenue is probably not going to come through until the summer. Well, we may issue a line of credit for them to be able to cover all of those costs. And then at the end of the summer, they would pay that loan back. Each month on a line of credit, you would be paying interest payments on anything you've drawn on the line of credit. So if you're not using it, you're not paying anything for it. If you draw on it, you're going to be paying monthly payments of interest only. But you'd be required to pay back that principal once a year. Now, what it would not be good for is I'm doing an expansion project in my business and I need to hire 2 more people. So I'm going to get a line of credit to pay for that. That's something that those people are going to earn their keep per se, but it's likely not going to be within 3 months, 6-month period. So you would likely want to either have some additional capital, or that would be considered something that would be more permanent. So we would call that permanent working capital. That could be a part of a term loan where you may be paying, to buy some new equipment, hire some staff, and you may do a 3 to 5 year term loan and pay for that investment over time. And you would have set monthly payments of principal and interest. That can get a little complicated and confusing. And lines of credit, like I said, get talked about a lot. A lot of point of sale systems have begun to offer lines of credit, as well as various online lenders. And unfortunately, it's really easy to apply for, but has gotten a lot of people in a lot of trouble. So I would highly recommend working with either an advisor or a banker to understand, what loan is going to be best for you in terms of growing your business in the long term. So that kind of hits on a lot of how is the loan going to be repaid? If it's going to be repaid with a set payment over time, then a term loan is probably the best tool. Now, if it's something that's really just covering a cash flow gap, well, maybe a line of credit is the right tool, and it'll be paid at the end of a project or the end of a contract. Now, when talking about the secondary form of repayment, that's when we really start talking about collateral and business assets, which we touched on a little bit before. So it's really easy to understand your secondary form of repayment in terms of talking about equipment or vehicles. It can get a little bit more complicated when your business doesn't have a lot of equipment or any vehicles. There is a security filing that happens called a UCC that would encompass all business assets. Now, if all business assets was at a lesser value of the loan or equal to the loan at, being generous with the valuation of it, we may look to use one of those other sources of support, such as FAME or the SBA in their loan guarantee program. So that's really understanding your collateral, is what's available to back up the loan if the cash flow isn't there. The other piece that comes into play is the character and personal guarantee. So any owner with 20% or more ownership is typically required to provide what we call a personal guarantee. Now, this could be for a business that has been around for 50 years and does really well, or a business that is just starting. There is no, it's not we're getting you for being a newer business. It's something that's expected for all companies. The only times that you don't have a personal guarantee typically is when there is no owner with 20% or more, and that's usually in the case of a nonprofit or a publicly traded company, because there is no real beneficial owner there. I think I saw a question.
Nate, I had a quick question about this topic. You were
Yep.
talking about lines of credit. I was listening to Diane Sturgeon of the SBA, main SBA, speak earlier today, and she had mentioned that sometimes it can be easy, or some might say even a little too easy, to get a line of credit from some, especially internet lenders or online lenders. Do you have any advice for small business owners who might be looking for that kind of quick capital, and what you would recommend?
Yeah, I would. That's actually really, I'm glad to hear that she's talking about it, because it's, I think, one of the biggest concerns for small businesses right now is there seems to be a lot of what you could consider predatory lending going on through these different sources. So to help navigate that, and you're looking for quick capital, I would really recommend, talking to a local bank. A lot of banks have options for smaller amounts with quicker turnaround times. We understand that's the way of the world right now. So it may not be, one click and it's in your account like it may be with some of the internet lenders, but usually a lot of your local banks, including us, have smaller loans that have a quicker turnaround time, more minimal underwriting, and they're still going to make sure that you're qualified to borrow and make sure that you understand the full terms and ramifications of that loan. And I saw the question come through. I did see it pop up. Small amounts vary from bank to bank, so I can't speak universally. But I would say typically, depending on the age of your business, it could be anywhere from $5,000 to $50,000. Some banks, smaller business is considered up to $100,000. It really depends on that bank. So I can't speak universally, but they usually have some sort of quicker turnaround tool that they can use. But just talking with a banker and understanding what you're getting into is certainly most important. I've seen situations where a business owner that was doing well needed that quick capital for, payroll was off by a week, and they used one of the online lenders, and it snowballed into, $800,000 worth of monies owed at 20% plus interest, and really put them in a near bankrupt situation. And this is a business that was profitable, doing well, and it snowballs so quickly. And I think there's a lot of great point of sale companies in terms of the point of sale offerings. But I will say, from a lending perspective, they have your daily sales. They know when you may be entering a slower time. And, I've seen it where offers or opportunities to borrow through your POS with a couple of quick clicks get pushed a little bit more heavily if sales are down. And again, the same company that may be taking that likely would have qualified for bank financing at, let's say, 7% interest or 8% interest and not 25% interest. I've also seen terms that aren't traditional loans, and they'll take a percentage of your daily sales. So rather than you paying them once a month, you're paying them every day. So it can just become a real challenge and really difficult to get out of that hole once you're in it. So again, I would just encourage you to take the time to meet with a couple bankers to understand your options and understand why, and if you're having trouble with financing from the banker, it may be, in terms of obtaining a loan, it would be worth having a real honest conversation with your business advisor to understand why that may be the case. There are certainly times that, we may not be able to do a project that is a good project, and, there's probably opportunities to finance it elsewhere. And then there's times where, we may be seeing something that could be a real concern for you. And making sure that you also see that and understand that is important. So that's one thing that I really try to make sure in working with people is if I can help them and it's a project that I believe in and I think that, it's well thought out and it's just something that for whatever reason we can't help with at the time, connecting them with a City of Portland lender or a CEI, which does some lending to help the project work. And these organizations I'm referencing are different from the online lenders. They're considered what we call community lenders. So they typically have some sort of government agency tie, whether that be statewide or nationwide. And they usually have funding that they're encouraged to lend to businesses that are struggling to obtain traditional financing. Rather than being a way to just make money, which is sometimes what the online lenders may be, and they'll charge higher interest, and they're doing it at a volume-based model that if we make 1,000 loans, well, it's likely that 800 of them will pay. We're going to charge a premium, and that's where we're making our money. These other community lenders that I'm referring to are encouraged to make good loans that may have a little bit more risk than what the bank is willing to take on to help the communities that they serve, whether that be the City of Portland through the Portland Development Corporation or statewide or regionally wise with organizations like FAME and CEI.
Just a few more in the chat here from Russell, who I believe mentioned earlier is with Community Concepts. Mentioned that he's seen businesses using those kinds of POS systems to access quick working capital, but high fees do translate to higher actual costs than a typical bank loan. And it looks like we have another question in the chat here. Are business assets what is left when you aren't actually running the business? Or could you just give us like a description of what business assets are?
Yeah, no, that's a great question. Business assets, when we say all business assets, it is a snapshot at any given time of what your business has for assets. So no, it is not that the business is closed and it's whatever's left over. Business assets would be, if I looked at your business assets today, it would be what you had in inventory, what you had in cash, what you had in equipment, what you had in equity built up in your business. So if you have, your business is always going to have assets if you're running it. Not all business assets have a title, which you can either place with the Registry of Deeds or the DMV. So in those cases, we do in all business assets. Even with real estate, sometimes what we'll do is file in all business assets. So you may have a piece of property, but some attorneys may not look at HVAC systems or heat pumps as part of the actual real estate. Those are what we call furniture and fixtures. So the bank will likely file that UCC to encompass just all of the miscellaneous items that you can't otherwise define through a title. I hope that answers that question.
Can I follow that up?
Yes.
So my question is, like, we have a doggy daycare. We have a lot of income that comes in. but that's not part of the assets. The asset is just the buildings and the gate structure or whatever that is. It's the physical stuff but not actually our clients coming in and the money we make week to week.
No, it would include the money week to week. So the assets would include anything that, from an accounting perspective, would be considered an asset for the business. Now, what I was talking about earlier is it's understanding that the total assets and value of your business, it includes everything. Now, the strength of that asset is going to be analyzed by the bank. So, for example, high revenue, it's supporting the business loan. We're going to still say, okay, it's a part of all business assets, but there is a shortfall in the collateral. And the reasoning is the only time we ever look at collateral is if the cash flow isn't there to support the loan. So that's why we may look to do a guarantee in that situation. So, like I said, I've worked with doggy daycares in the past, and that's what we've looked to do is, okay, there's value in the business. It's doing well. We're going to put that filing for business assets, but we understand that if the loan isn't getting paid through cash flow, well, it's and the primary collateral is the cash flow, then we need to find a different way to support that project. And that could look at, okay, well, personally, there are assets available. So, the owner's willing to, pledge a personal asset to support the business loan. Sometimes that happens. Sometimes it's a mix of that along with, okay, we're going to look to the Finance Authority of Maine to do loan insurance for the first 2 years or indefinitely, depending on the situation. And I do want to give Community Concepts a shout out. So they're another great one of those community organizations and community lending partners that a lot of our local banks, including Kennebec Savings Banks, works with to help business owners. So Russell, thank you for joining. So I feel like we covered a lot that's going to be encompassed in the loan application there. So we've talked about business plans and why it's important for the bank to understand your story, and it's you demonstrating that you understand the ins and outs of your business. And that includes the not fun things to talk about, which is pricing, strategy, market, competition. One thing that I would say that it's usually the first critique that I would provide in a business plan as a lender. And also understand that it's okay for your lender to provide critiques on your business plan. It's very common that it's a back and forth with you bring an idea to the table and have a rough idea of a business plan. A lot of the times people will come to the bank, we'll meet, and then I will refer to SCORE or the SBDC for you to work with them to refine the business plan and refine the projections. They have a lot of experience in doing this. Because of the experience they have, they also tend to have really strong, up-to-date examples for cost. So when you're building out projections, they're going to be able to provide you some likely numbers for things that you may not know, like insurance, payroll, point of sale cost. It's stuff that they have almost memorized at this point because they're advising businesses on a daily basis. So typically I would then refer you to the SBDC or SCORE to work on your business plan. You then come back to the bank, and then we may have a few specific questions that we ask you to clarify upon. And at the end of the day, the business plan should be a document that you could hand it to someone who doesn't know you at all, and doesn't know your business, and they will have a strong understanding of who you are, why your business is going to be successful, why it's going to be successful, where it is, what does the market look like, what does your competition look like, and have a full picture. So it works out well for me in terms of thinking that through. I'm a lender and based in Southern Maine. Kennebec Savings Bank has been in Southern Maine for a couple of years. And our underwriters sit in Augusta North. So sometimes there's things going on in Portland or wells that they may not be familiar with. And being able to tell that clear picture to them as they're looking through the project is very important. So, the business plan is telling your story to someone who doesn't know you at all. And then the goal is through that business plan process, as you're working with your local lender, they're going to have a really good idea of who you are, because in addition to the business plan, your lender is going to be providing narrative and communication to the bank's underwriters and leadership on who you are and why we should do this deal and why the business is going to be successful. It's also good to be realistic. So don't say, oh, there's no competition, it's going to be a slam dunk, and there's a million people that live in Portland, so my market audience is 1 million people, because it's likely not going to be 1 million people, even if your service could apply to everybody. I keep picking on Deb because she's off camera and she's throwing out the dog. So people with cats will not be a part of that target market. People that are retired may not be, or maybe they will. Maybe they do need a little break from their dog. Non-pet owners is the obvious one that's not a part of that target market. And then there's an affordability component. So how many people in your region have a median income that would allow them to engage with your service? The arcade bar. Okay, well, if there is more and more people not drinking alcohol, how is that going to impact the business? What does the competition look like? What options are you going to have available to bring in people or expand your market? So typically a business plan, you'll define 3 to 4 customers, and you would almost do a customer persona of, this is the one person I imagine using our service the most. This is the second type of person, and it's usually you're covering some demographics, income, age. Some businesses do have, gender play a role. Some don't. It just depends. So understanding your target market is going to be really important to defining your business plan. And it's okay to be critical of the business in your own business plan, because not only is it for the bank to look at, but it's also going to be for you to use as your roadmap. So when you're 3 months into running your business, are you hitting your sales projections? Are the customers you thought coming in? Maybe 2 out of the 3 are, but the third isn't. So, okay, we should do a marketing initiative to gain that third customer type, because our projections relied on that third customer type. So it's important to think of it as a working document. Your first month of business, you're probably not thinking, did I hit projections? Or maybe you are, but if you're not tracking it, or you didn't have a really realistic benchmark, then those projections aren't serving you. And whether they're projections that are realistic or not, you took the time to work them out. So making them as realistic as possible is important to not only the bank, but also for you as the business owner. Financial history can play a role in your projections. So a few of you have owned your business and are looking to expand. You would likely still put together an up-to-date business plan with some projections that are going to be based off of what you've already done and why you think you're going to grow the way you are and at what rate. So we see that with people that are purchasing a business. They may reference the past owner and say, okay, but I have this experience that's going to help us, or I'm going to continue to work my day-to-day job and run this business. So, the past owner salary we can get rid of. So that's going to grow the financial health of the business. So understanding where you've been and where it plays into where you're going to go is also important. Your banker will send you what we call a personal financial statement to complete, and that's looked at as a snapshot of you personally. So that includes all of your personal assets, personal debts, and remember, that is the third thing that we look at in terms of being able to repay the loan. So I run into it a lot with people where they're like, yeah, I haven't owned my home for 20 years, so I guess I'm not eligible for a loan. I would say that is not the case. It is a part of what we look at. It is not the only thing that we look at. So just be honest in it. Don't stress about it too much. I see some people, use it and they track every potential statement that could ever exist down to the penny. That's great. but ideally it's a snapshot of you at that point of time. What personally do I have available to support the loan request? And just know that it's a part of the picture, not the whole picture. We've talked about collateral quite a bit, and we can move to the next slide to talk about sources and uses. So sources and uses is something that your advisor will help you put together and your lender will refine with you. So some loans are really straightforward, and I'm buying a truck for $50,000. I'm putting $10,000 down and I need a loan for $40,000. Relatively straightforward sources and uses. Then there are some that are a little bit more complicated. I'm working on one that involves the purchase of real estate, a loan from the seller, a loan from the city of Portland, and a budget for outfitting the real estate for that person's business. So the sources and uses are a little bit longer and a little bit more complicated. And depending on the scope of your project, your closing cost may be able to be a part of the loan, and that's going to be a use of the funds as well. So understanding what you're going to need for capital the day you open your doors is really important. Looking at the bank account and saying, okay, I have this much to pour into my business. Well, that maybe shouldn't all go towards your down payment or closing cost, because you're going to need some funds to retain as you start that business. So very typically you hear numbers of 80% financing, 20% down. I would say that's pretty typical for most projects, but it really all depends. I've seen up to 90% financing. I've seen up to 100% financing. And I've seen situations where it doesn't make sense to finance any more than 65% or 60%. So again, just start working with your banker, and they're hopefully going to be taking time to think through other options. There are a lot of partner organizations out there that can be utilized to help your project. So educate yourself the best that you can of the different options and services, because it'll help in vetting the banker and through the process, because you want someone that's going to be thinking through all of the potential options with you. But don't feel that you need to be an expert. That's our job, is to help you through the process. My job isn't to sit at my desk and wait for people that have everything all put together and apply for a loan, and that's the end of the day. It is a constant communication and working together to get projects done together. I'm going to be successful as a banker when my customers are successful in running their business. So it should be a shared goal and a shared effort. And I think when looked at that way, the relationship with your lender is going to be a lot better. We can move to the next slide, unless anyone has any questions. Great. So yeah, I've kind of hinted on it quite a bit throughout this presentation. I would say there's a big difference in banking locally, and that doesn't necessarily mean just going to a local bank branch. Banking locally, I would encourage you to know your community banks. In the state of Maine, we have a lot of those. Any bank that has savings in the name here in the state is what we would call a mutual savings bank. And it means that there are no owners, there are no stakeholders. The owners per se of the bank would be our customers. Unlike a credit union model, it's not that you have an actual ownership interest. It's that the banks are encouraging community giving through whether foundations or nonprofit giving, encouraging lending to small businesses, prioritizing home lending for first-time home buyers, all of the good feel-good things. We're able to keep those strategies in place even through downturn economic times, because we don't have a quarterly dividend to pay out. So national banks play a really important role in the banking system, I would say. But in terms of attention to small business, I think you tend to be best served when you go to a locally run mutual savings bank. So understanding that and understanding the breakdown of the bank's intrinsic goals, I think, is really important. Now, build relationships with them. I've had people that I've met and they didn't end up they weren't able to start their business for whatever reason for 6 months, a year later. And we kept in contact and continued to work together. So when the right opportunity was there, they could move quickly. It was a lot easier for me to tell their story because I had known them for a year versus they felt they weren't ready to talk to a banker, so they waited until it was pretty tight deadline. It's a lot more difficult to build that relationship, so it makes it a little bit more difficult to tell that story. We have tons of great bankers and tons of great banks here in the state of Maine. So I would just say, get to know your resources, get to know your banker, and don't be afraid to ask questions. We're here to help and not judge. I guarantee you, everybody on this call, I couldn't do your job or run the business that you're thinking of running. My job is doing this. So not knowing what I'm saying or having questions is normal and part of the process. If I showed up to try to run your business or do what you're hoping to do, I likely would have 1,000 questions as well. And with that, we can go to the next slide. It really highlights a lot of different resources that are out there and available to you. I'm happy to speak to any of these a little bit more specifically, but I will open it up to any general questions about business banking, entrepreneurship, bridal shops, anything.
Well, while we wait for a question or two to pop up, I did just want to say thank you for speaking about this today, Nate, and especially drilling down a little bit more on that line of credit topic that you had mentioned. I think that is very important, and it's not something I really had thought of before. So it is really nice to kind of see what that looks like from the other side, so to speak. And we will give it just another minute for questions. If anyone is typing anything in the chat in the meantime, I will go through a little bit of our wrap up. I just want to say thank you to everyone for joining us today, and a special thank you for Nate for presenting to us today with very wonderful and useful information. You will be receiving a survey in the email probably a day or two after this workshop concludes. It'll just go over a bit about how our presenter Nate did today, so please give us all 5 stars. I feel like you did a great job anyway. And if you do want to speak to a SCORE mentor, it is a free mentoring service. Just go to score.org and hit find a mentor, and we can match you with a mentor who has skills or knowledge in your specific industry or area. We did have a question in the chat. Can you please review permanent working capital structured loans?
Yes, so permanent working capital loans can be structured a number of different ways. So there was a bullet point on one of the slides that talked about useful life. And typically useful life of whatever you're purchasing is going to be what we consider for the term of your permanent working capital. So purchasing a vehicle, purchasing a piece of equipment, purchasing real estate are all examples of something that would be considered permanent working capital. Now, those are all going to have very different useful lives. Some pieces of equipment retain value and retain their ability to perform, for 10, 15 years. So you may have, a bulldozer loan that's 10 years long or 15 years long, even sometimes on a used piece of equipment. Now, there's other vehicles that, such as boats and ships, and those tend to have a much shorter useful life. So the second that they're purchased, a lot of the value dissipates. Now, in terms of permanent working capital loans that go towards things such as employees and other items that are a little bit looser in terms of what their collateral is, those tend to be as short as possible or as short as the cash flow will support. So, sometimes as little as 2 years and usually no longer than 5 to 7 years. That's going to be kind of based off of what it's used for, what the company's ability to repay is. And in those situations, you may look to have a permanent working capital loan that's backed by a FAME or SBA guarantee. So if you're, I'll use another example too. If you're like leasing a space and your budget to really turn that empty shell into your business, let's say that's $100,000 and your lease is for 5 to 7 years. we will likely match the lease term, but not go over 7 years. So even if you have a 5-year lease with an extension to extend to 10 years, your loan would likely be 5 years. Now, if your lease was 2 years and you were looking to pay on the loan for over that 2-year lease, that would be something that we would push back on and say, either work with your broker to have a longer lease, because the bank would not do a loan on equipment that's going to be in a space shorter than your lease or longer than what your lease would be. I hope that answers your question.
I think that was our last question, and it takes us just to about time. So again, Nate, thank you very much for educating us on the topic today. And
Yeah, thank you all for attending.
Yeah, thank you everyone for attending. And
Yep.
we actually did get a follow-up really quick. It'll be the last one here. Can we get a copy of the slide deck presentation? Yes, that will be sent out as well with the same email where you'll get the survey.
And I will just add my contact info is included. So if anyone has any further questions or want to talk about their business specifically, happy to have those conversations. So feel free to reach out using the contact info that Dan has, or reach out to Dan.
Have a great day, everyone.
Thanks, guys. Bye.